Today was the worst day the market's seen all year, and for us energy bag holders, we had a particularly painful day with the price per barrel of oil down around 8% at the close. So what does this mean? Now we've got the Delta variant coming. Should we expect a massive market sell-off? Are we way out of our league here at this crazy high level when we're about to get a brand new coronavirus out there that the vaccines can't seem to stop in terms of full force? I've thought about this very much in depth, and I have been tracking the Delta variant and the rise in cases that have been happening throughout the country for the last several weeks. This is no surprise. And I don't think it's a big surprise to a lot of other areas of the market, particularly energy, which has had a several week drawdown occur. And this is nothing new. And I think today could have been the bottom in energy. Can't say that with certainty, but we're already a little over $10 a barrel off the high in energy. And the fundamentals remain intact. And, I said this last week, I believe. I'm saying it again because I heard some actual factual data on this. I think a lot of the selling of oil doesn't necessarily have to do with a falling demand or rapidly increasing supply. Let's talk about the supply first, because that's the topic at hand that people are talking a whole lot about. I don't think there's any sort of major supply increase coming. 400,000 barrels per day is like 0.4% of the global energy demand. And we're not even going to get that full 400,000. If you watched the OPEC meeting yesterday, which I did, they said most of the countries are not going to meet their individual quotas for hitting that amount. And that's the maximum they're going to add. They're going to be very cautious of Delta. So let's assume that OPEC, which likes to have high prices, doesn't want to oversupply the market. So they're going to be very cautious of Delta. And because of that, they reserve the right, essentially, to not produce inside of that quota. So that additional supply is only relevant if there is additional demand. And that supply number, even if we were to get all of it, is still not enough to outpace the increase in demand. So the supply-demand issue is not the reason for this sell-off, in my opinion. So what is? Well, what has caused the immense oil volatility that we have seen in the last year? Do you remember that day when we had negative $37 per barrel oil? And earlier that day, we were at 10. That was a $40-something drop in the price of oil in a single day. Well, it's paper trading. I don't mean paper hands. I mean literal paper trading. So in a perfect world, we have the most efficient market and most accurate prices for the commodity, particularly oil. We have a market determined all entirely on supply and demand. However, that's not the case in the current market. We have what are called futures. We have paper traders, hedge funds, other asset managers trading oil on paper. And there's a number of factors here. They can't take physical delivery of the oil. They're speculating. They're trying to make a quick buck. And when they see that Delta variant concerns are happening, OPEC uncertainty, which led up to this weekend, but I think is actually positive for the price of oil, they want to sell their contracts. But that is artificial. Those are artificial transactions that are not related to the efficiency of the market. So you've got these bag holders of paper that today, when the market's down, everyone's concerned about rising Delta variant and its effect on the economy, which we'll get to in a second. They are flooding the market that has its supply and demand people with additional supply artificially. And, those contracts coming in, the random buyers are having to say, I don't need any more, but if you give me a lower price, I'll take it. Then we got another seller, another hedge fund that needs to sell. Well, I need a little lower price than that to take it because I don't need any more. I've got my futures contracts ready for my demand. So you've got a bunch of paper traders loading up the market with that stuff. Now, stocks, yes, they are correlated to the price of oil. They do consider the price of oil in their sentiment, but there's other factors that come into play. So, when the price of oil was up, they were kind of worried about Delta variant a little bit before the futures traders. So oil stocks didn't want to continue rising. For the past, several days, and I guess 2 weeks now, actually 4 weeks when oil was flat, we had seen oil stocks underperforming the price of oil because the price of oil continued to rise and continued to stay flat until the last couple of days. But the price of oil stocks fell. Today, we saw the price of oil stocks fall and then hold the line. They held their levels and the price of oil kept to inch down as we had, allegedly, in my opinion, these paper traders putting in the artificial supply. So I think that's a very good sign for stocks. Why? Tomorrow is the first of a series of very crucial days. We have yet to get the energy earnings, which I think are going to be very strong with very positive outlooks into the future. Halliburton reports tomorrow morning. My assumption is the stockholders, the people who don't have to take delivery, aren't directly affecting the supply and demand of oil, are speculating that Halliburton is going to talk very positively on their earnings and on their future earnings. So my assumption is that stocks are holding the line and possibly bottom today, because I think we're going to get some good news on the market, on the real world tomorrow, and we'll see what happens with that. So those are my thoughts and my information on energy, except for one more thing. In addition to the paper traders thing, apparently, according to Brian Sullivan of CNBC, there was a 20-to-1 a month ago, a 20-to-1 ratio of bullish to bearish call option, or rather futures option activity. So when you have that kind of sentiment and you sprinkle in some reasons to go negative, there's a whole lot of lopsided people on one side of the trade. So that's really going to screw up the market. And I think that's what's happening here. So I think we gotta, if you have options, make sure you're getting them past October, November, November, December at the earliest. I'll get them in a 2022 or 2023 if I'm playing this oil game. That's what I'm doing. So we will see what happens here. Delta variant, not too concerned. Let me give you one reason why. If you listen to the doctors, they don't seem too concerned. They say, this is the pre-reason why. Haven't got the reason why yet. If you're vaccinated, you're good. I read something today from Tom Lee, Fundstrat. 40% of the COVID deaths have diabetes. It's unfortunate, but not a surprise. Yes, the 10% of the population does have diabetes, so that's a substantial chunk. But, COVID's been out there. I'm sure a lot of people are vaccinated. 99% of the deaths are from unvaccinated people. So if you're afraid of COVID and you're gonna change your behavior, you've probably been vaccinated. If you're unvaccinated, you probably never change your behavior in the first place. So that's positive. In addition, and this is the important fact, the United Kingdom locked down on fears of the Delta variant because they had the Delta variant spreading throughout there. And then cases rose and they decided to remove the lockdown as cases were rising. So they basically quashed the idea of having a lockdown. So I don't think lockdown is likely. And I think we have to stick to the script, remain strong in the face of noise. And at the end of the day, I think this is a whole lot of noise. So we'll see what happens. And until next time, peace out.